Another video. Now before we get started, today I'll give you guys an update on the Nasdaq, the S&P 500, the Dow Jones, and on gold. As just in that the US inflation rose to 9.1% in June, higher than what was expected. Now if you are new here, the sub would be appreciated, and if you enjoy the video, just hit the like button. Now the Dow Jones currently as we speak is now down 6.2%. the stock market still has to open. We also the S&P 500 is down 0.92%, the Nasdaq's down 0.95%, and we've got gold also here down 0.8697%. so that is what's currently going on, guys. Inflation is at an all-time high in the US. Equity indices immediately drop lower on the release of that CPI data, as investors sees now more interest rate rises ahead. A 0.75% is what stomped the market to the downside. Now with this 9.1% inflation, you can expect the Fed to hike interest rates by 0.75%. in fact, we could possibly see a 1 basis point interest rate hike there as well, because the data is now more the inflation is now higher than what it was before. 9.1%. oh my god, I don't believe this. So it's important to keep in mind how this all works. Now it's when inflation is high, interest rates needs to go high, because why? The only way the Federal Reserve needs to, the biggest tool the Feds have to decrease high inflation is to hike interest rate. That is their biggest tool. That's the only way they're going to cool down the market. By hiking interest rate, it's almost like you're putting consumers in debt so that they don't have enough money, and this encourages them to spend less money and now put it towards their debt. As a result of that, the market then tends to slow down, inflation tends to drop, because it's almost like making people poor so that they don't have money to spend, and in that way inflation tends to slow down. Now if you think that's the only problem that US citizens have with high prices in food, and because that's what the CPI does, it measures goods and services purchased from consumers. It measures the consumers spending. That is basically what it measures. We also got the US and Ukraine, the Russia and Ukraine situation, that had put more pressure on energies, like the price of oil and fuel prices has skyrocketed there as well. So US consumers is now even being hurt at the pump as well. A tough time to be alive. Now we are going to start with the Nasdaq 100 here, my good friends. Now there is no question to whether or not the Federal Reserve is going to hike the interest rate. It's important to keep in mind that there is still a lot of room down for the Nasdaq to go and hit this level. Now if you don't have the kind of patience that I have, you're more than happy to just look for these short sells, but I'm still holding sells. I'm planning to ride this wave to the downside. Now the Nasdaq 100 over here from the monthly time frame, we're going to look at this structural level over here, because the market is currently trading below the strong level of resistance that got broken, that is now acting as support. The market is currently trading at a strong level of support once again. Now this level over here is a very strong level of support that the market is currently testing for the first time. Now there is a high possibility, in fact I'll tell you this with all the confidence that I have, the market is going to move to the downside. We need to watch and get a clear break below this level. Once we get that, which is what we are going to get, we can then look for more selling opportunities for the market to move to the downside. But for now, we are going to use this as retail traders for our take profit level to the downside. Now on the weekly time frame, what do we see? Now if you remember the video that I did on Sunday, I told you this is going to become a consolidation market, and this is exactly what the market is starting to do. You can see the market is starting to move to, well, sideways. But now with the high inflation data following with high interest rate hikes, you can definitely expect the Nasdaq to dump below this level and start that continuation to the downside as identified from a monthly perspective. Now I also said on Sunday on the daily time frame, if you were here when the market was sitting at this level, and I said the market is going to start this dump from exactly where it is to the downside there as well. Now we're currently trading at daily support. Now the market had also printed this massive impulse. After an impulse, you expect a correction. Now before you measure the correction, you always want to look to the left, and you can see this was a structural level that the market had created. Now the way you measure that correction is by taking your Fibonacci from the high to the low of the impulse. You can see we got a 0.382 pullback that's lining up perfectly with that structure. Now there is a high possibility that we could potentially see the NASDAQ pull back to that level first before a further continuation to the downside there as well. Now as traders, we have to be reactive and not predictive, and we have to learn to adapt to the ever-changing market environment. Alternatively, if the market does close and break this level today, then we're going to look for that to the downside there as well. But like I said just now, there is still a possibility for the NASDAQ to go slightly lower, potentially go and hit that low there, pull back, and then start that continuation to the downside. If you did catch the sell I call for you guys on Sunday, you should still be in there like I am at the moment there as well. Next up, we are going to look at the Dow Jones. The Dow Jones over here also is now finally broken, or not broken, but it is now currently respecting the structure that we have been spoken about, this level over here. And I'm just going to, because you always have to take this wicks into consideration, because it's a level that the market had once gone to visit. Level created over here was resistance. The market broke above that, came to test it as support. Now support's currently holding for the short term. We're going to use this as a short term target on the Dow Jones as well, the same as we anticipated for the NASDAQ. On the weekly time frame, what do we see? Now from a weekly perspective, it's clear that the market wants to print this information. Now after an information, you expect a pullback to the neckline before that continuation to the downside. So there's a good possibility for us to go and trade the right leg. Got that information on the daily time frame. What do we see? Now from a daily perspective, if you do get a clear break below this level over here, then that would be a nice previous level of support that got broken. That would be turn resistance. We have this massive impulse. So after an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low. We're also testing previous level of support over here. We've got the same information. We expect a pullback to the neckline. The 0.382 is lining up perfectly with that previous level of support that is now turned resistance there as well. Now the best way to approach this is to wait for the market to pull back to the previous level of support that is now acting as resistance, and on that retest, we're start looking for selling opportunities for the market to move to the downside. Next up, we've got the SNP500, similar price action to the Dow Jones. So we're going to jump straight into the daily time frame. What do we have over here is we also got a market that is just about to break this very important structure that we can see over here. This level in the market acted as resistance. Again, resistance, and then resistance got broken, support did not hold. The market then broke above resistance, then tested it as support held. Market broke below support, and all of that supports once again turned resistance, and looks like a 0.382 pullback there as well. We have this massive impulse. After an impulse, we expect a correction. If you take your Fibonacci from the low to the high over here, we can see how the market is currently testing strong support. Again, similar price action to the Dow Jones. We can expect this pullback to the 0.382, and then from there that continuation to the downside for the market to go and complete that consolidation phase as we expected and identified from a weekly perspective. Next up, we've got gold. Now, if you remember, I spoke about gold as well. I told you guys we can expect the market to continue lower. Now, the market did not hit this previous level over here that we can expect to go in the market to go and hit. In fact, we are going to take this wicks into consideration because there is a price that the market had visited previously on the weekly time frame. What do we see? Now, from a weekly perspective, you can see the market is quite bearish, and the only previous structure that we have identified over here was the one that the market had broken about last week and then closed. And at the start of this week, we were quite negative. You can see we have all of these massive liquidity wicks in the market there as well. Now, here on the daily time frame, what do we see? Now, from a daily perspective, we can see this was the most recent structure that the market had created, and this level over here acted as a level of support and is now acting as a level of resistance. Now, the best way to approach the situation is obviously just to wait for the market to pull back to that level, previous level of support that is now turned resistance. And then on the retest, we are going to look for the market to continue lower and go and hit that previous level at the after monthly time frames low as we expected and identified from a monthly perspective. Now, it's important to understand that fundamental data drives the long-term momentum of the market. Now, is the stocks going to dump? Yes, it will. It's important that you do get into the market at the correct prices or at the best prices, as this will give you a higher leverage, not a higher leverage, but a better chance to minimize your risk. Now, that's all from my side. Thank you for your time, and as always, cheers for years.